so it's already
All
thumbs
right,
up.
cool. I think we're live. All right, so let's go. Look, so my name's TJ, and I'm the commercial manager for Storm 2 Singapore. So I am responsible for developing and driving commercial strategy across the APAC region. I guess what that really means is that I help our clients understand what we do and, of course, make sense of the solutions we provide. So I have Evan from Animoca Brands, as well as Dr. Michael from Clans with Me. So, gentlemen, maybe you could give us a little introduction before we get started.
Hi, Evan Ouyang here, president of Animoca Brands. Very happy to be here and very happy to talk about digital asset ownership, about what blockchain can do to transform the space.
All right, perfect. Hi, everybody. My name is Michael Colo. I'm the CEO of Clans. We're a digital asset management company out of Sydney, Australia. And I'm thrilled to be talking about all things blockchain, crypto, and wherever else this conversation might take us.
Thank you, gentlemen. I mean, first off, boy, what a time right now with what happened with Luna just a few weeks back. I think it's raised a lot of questions about stability of crypto assets. But before that, I think it's good to understand what blockchain is. So maybe perhaps, Evan, you could fill us in on, the details about what blockchain, how did blockchain even come about?
Well, blockchain has been around for actually quite a long time, right? One of the first applications for blockchain that is famous is the Bitcoin, right? So, and by the way, we would say that blockchain actually enable what we call currently the Web3 movement, which is what everybody's going so crazy about with cryptocurrencies and NFTs, right? And what it enables is that it enables digital asset ownership. So in Web 1, we had sort of what you call just the read-only web. In Web 2 is platform, right, based, social media, so you can write, and it really transformed a lot of industries in terms of like newspaper industry. In Web 3, you can reading, writing, and owning, which now then enables virtual economies to be able to be built in what we call then metaverse, right? But then I would say that Meta, Facebook changed its name to Meta, meaning that they were looking at the opportunity and saying that, hey, there's a big metaverse opportunity available, but that is not a blockchain-based metaverse, right? So what we are looking for is true digital asset ownership. Same with Michael, because he's in this space, right? And what we're really looking at is sort of like how to enable creativity to be owned and data to be owned by all of us via blockchain. Rather than data being copied and sort of data being mined for free, how can we own our own data and then therefore enable commerce on that?
Right. So, I mean, in your opinion, what do you think made blockchain such a powerful technology? Where do you think it's going, and what is actually driving this innovation?
The innovation comes a little bit from the fact that is there a better way to govern organizations and make decisions, right, in the internet space, and obviously actually across multiple industries. So we have built modern commerce based on what we will call traditional capitalism, which is really around surrounding what is maximizing shareholder return and centralizing trust, right? Meaning everything is about centralized authority, proving centralized authorities to be the de facto prover of who can be trusted and who cannot be trusted. Now, the origins of a lot of this stuff, and also with respect to cryptocurrencies and also Bitcoin, is really around the modern capitalist system showing its weaknesses. So with quantitative easing that has taken place since, I guess, the financial crisis in 2008, we are seeing a lot of monetary easing and also the deflation or the inflation, basically, asset inflation that has taken place since then. So is this really, are the sovereign currencies really the protector of wealth? Are the governments really making decisions that are good for everyone, right? And given that, I think folks are creating their own, basically a decentralized currency that which is Bitcoin, to then get to the point where can we trust each other through a decentralized, unhackable, and anonymous ledger that would create new economies as a result of it. Now, the power of Web3 and the ethos arising is actually super powerful, in the sense that if you could actually democratize trust, you don't need central authorities to sort of prove what is valuable or is not valuable, as long as it's supported by the community, right? So so at the end of the day, what you see is all of these. Once you have cryptocurrencies as underpinning, you are then allowing also NFTs to take place, which is actual assets that is in the digital form, but they actually exist within either gaming system or metaverses that allow the owners or participants in these spaces to then live their lives in their way, while being able to, in a way, freely trade, compose, and interoperate amongst the different Web3 applications that they're in.
Cool. Right. So, I mean, Michael, on to you. I mean, in your opinion, I know this is not really your niche, but how do you think, or what do you think, and what do you think goes into building a successful blockchain product? All right, I think we've got some technical issues. Maybe Evan could
If you're asking
follow a
me,
little
then
bit.
my internet was cutting out there. So you want to repeat the question for me, TJ?
Yeah, no problem. So I was asking, how do you build a successful blockchain product? So bearing in mind, I know this is not really a niche. I mean, but you've been in the trading game for a while right now. All right. Maybe perhaps we'll get back to Michael in a bit, but maybe Evan, you want to take this one for in the meantime.
Well, building I'm sure Michael will have a lot to say about this, but Animoca itself is a operator and an investor. So we're actually known in the Web3 space to be one of the most prolific investors, with we have over 300 companies as our investments. Some are majority owned, some are minorities. What we seek to do is that we try to get to the point where we are tokenizing or helping tokenize virtual economies via game systems and also realizing what are we building to build virtual communities, and therefore realizing value arising from building these communities. So if you ask me what are the most successful ingredients that is necessary to build successful projects, it really is around building an ecosystem that is focused on the community. So when we make deals and when we actually work with companies or investees, we don't actually look for what is the profit maximization opportunity for us. It's really about helping the companies and helping them grow, and therefore. What we would do is that we would use what we call the blockchain engine, which goes from sort of designing the tokenomics to what the gaming interactions, how does the economy flow, the sinks and the faucets, listing the tokens, planning the sales, and also building continuous utility with the community. And our revenue model ultimately is based on primary sales of other tokens or NFT sales, and then and also secondary trading of those assets. Because when we create these assets that originate from us, you can write in a smart contract to have a creator's fee. So that becomes a continuous income stream. As these economies becomes large, the velocity of the economy, number of trades, and the size of these trades, and the number of people participants that are in it have a multiplicative effect on the business, right? So that's what we're trying to build, are these credible community models where we have these what we'll call the real metaverses where digital and asset ownership is enabled.
Right. Thank you so much, Evan. Sorry, nice to have you back, Michael. So yeah, going back to my question, I mean, in your opinion, how do you build a successful blockchain product?
Oh, gee. Well, first of all, sorry about that dropping out. I think the internet connection in Sydney is not great. We're having some storms, but it looks like some of the other people on the line maybe had some problems as well. So if I'm really frozen and still, it's not because I'm ignoring you. It's because the internet connection is bad, just in case you're wondering. Look, I mean, I think we're all working that out. I don't think anybody has the pure answer, and I certainly couldn't tell you from experience because I don't have enough experience to tell you. I'm one of these people who, I suppose, comes from a very traditional, albeit quantitative kind of AI-based background. So when I saw this area and started to develop and sort of move forward, I became interested, but it wasn't until much later in my career that I actually pivoted more actively to this area. And I think one of the wonderful things for me is a kind of a second discovery of a career through this process is seeing the generation come through, which is a very interested and hopeful, and I suppose maverick generation, good and bad sides of it. We both know the kind of negative sides of crypto, and then there's some really, really positive projects as well on blockchain. The communities, as Evan said as well, I think being community minded, I think is a really interesting characteristic of this industry as well. And I think myself, like many others, are hoping that the way that we can shape this industry to come as a business, as a form, maintains a lot of those positive values, those community values. We don't necessarily want to reproduce, again, a business model taken from banking or asset management or insurance, and then just put a blockchain on it and say, here we go, here's the next version. But we want to kind of reinvent some of these functions as well, in terms of how they serve society, how they serve communities, how they're accessible, transparency, and so on. I think Evan mentioned at the beginning, which I think is very important, that the beginnings of this whole space find themselves rooted in a certain kind of mistrust of centralization, or this idea that central organizations are not chosen by the people or not chosen by communities of people, but they kind of there because of monopolies, especially for emerging countries. That's probably true, but actually for developed as well. And so there's a kind of a democratization that blockchain as a technology allows, so long as it creates accessibility and equality of accessibility for many people. And I think there's probably going to be some happy balance that we'll come to as an industry, where we take the best bits of blockchain, but we still can find there's some things in certification still rely upon a central agency. So I think the answer is I don't know, but the answer is I'm really looking forward to the challenge of finding out.
Right. So it seems that we've got a couple of questions in the comment section. I think Chan Rongyao was asking, what do you think about having regulations in the crypto space in the future?
Should I take this one, Evan? You okay?
Go ahead. I'm going to follow up as well, right? Give you some more
Okay.
airtime since you dropped off.
Yeah, absolutely. Look, from our perspective, we like regulation from the perspective that it allows more mainstream adoption of strategies into the space. It kind of solidifies crypto as an asset class. It helps us to create better investment and structured products in this space. It helps us to bring this to the mainstream, who are still very much thinking about crypto as a highly speculative, gambling-like asset. When the news is filled with stories of Luna or Bored Ape or whatever, it's a poor representation of the richness and the tapestry. But unfortunately, it is the thing that people kind of go past. So half the conversations we have is, is this just a sham? Is this a scam? And then the other half are people who are kind of believers, are into it. But in order for us to start moving beyond that fairly small percentage of the world's population into, you think about this as a gambling asset or something to make a quick buck on, but to think about it more as a legitimate industry with the technology that will infect lots of industries, I think we need a certain level of regulation. The only caveat I'll put at the end of that comment is part of the purpose of blockchain is to escape local regulation and control. So there is a sort of oxymoron here, which we have to be aware of. But I think, again, where we are in the stage of capitalism, societal building, I don't think we're quite ready for that borderless open economy that maybe we wish for, or we wish for the future for. So I'm guessing a certain amount of regulation interim is going to be necessary.
Yeah, so I'm not in disagreement. Not complete agreement, and we are not anti-regulations. We believe that so Animoca Brands itself is not a what we would call a sort of like, oh, this is a different world and you can't regulate this. We are trying to get to the point where there's better governance with decentralized trust, right? So what we are looking for in our values is that are there ways to build community in a way that is not centralized, right? We believe ultimately regulations is something that is necessary, although we wouldn't say that the form of it is kind of like the prerequisite for the company for the industry itself to grow. It really needs to figure out a lot of things that are self-regulating, which is actually what happens to all creative industries anyway, right? So the art market, by the way, is very similar to the digital collectibles market, where you do have whales coming in funding, certain artworks and all that, and certain groups of artwork that people believe are a little bit manipulative, and similar things would go on in different markets, asset markets of the sort, where supply and demand equations are very imbalanced, right? Now, however, for us, when we sell NFTs, we do KYC. We obviously, we are very concerned about things like counterterrorism financing and AML and all that kind of stuff. So those are very necessary. And then the other thing that we also look at is that what about stable coins, right? What cost the USC and Luna ultimately is with no issues. In fact, we welcome people trying algorithmic stable coins, but the values in which we actually invent these things need to be much more humble than it has been. It's not criticism necessarily to anyone in particular, but we have to understand that there is certain experimentation for both investors and founders and teams in which they're creating something new. Now, the fiat market, the real asset market, itself is based on leverage, right? Banks are leveraged as well, right? There's a reserve ratio, all stuff is regulated, right? And it's actually not that different from what digital monetary systems ought to be. And in fact, because of smart contracts, a lot of times it's actually not capital efficient because it is not leveraged, right? Now, to the extent that we're experimenting with these leverage systems, we have to be very careful what happens if things go south, right? And there has to be humility, both in terms of the founders and the teams, to get to the point where they have certain vulnerabilities to understand that if you get into situations, then what, right? So we cannot have a speculative mindset. And the same thing is sort of what I sort of have been saying all along, publicly about how the space ought to evolve is that you have to do experimentation. You have to continue to embrace the volatility of the market. For investors, it's really about understanding there's no one-way bet, right? It is definitely two ways. And upside can be large, but then there could be volatility riding in the downside as well. But this is real. Web3 is very real because we're reinventing the internet as we speak, and we need good folks in it and sit there in the long run. But we're definitely not anti-regulations. We believe some parts of it is important, but certain things such as banning retail investors from investing into it, where some governments are going towards, we don't think that's helpful.
Right. Cool. So, I mean, in your opinion, then, where do we go from here? In terms of the future of cryptocurrency or blockchain, and what are some of the potential new applications of blockchain? I know Evan mentioned, the metaverse, and of course, not forgetting NFT earlier as part of the conversation.
There are many. I mean, for this one, I'll go first. We'll take turns, Michael. So there are lots, right? So games, by the way, is what Animoca got into first because of our DNA, right? We have been in business for nearly a decade, and we've been doing app store games, and so that gaming is our DNA. We also believe that folks in the gaming space actually understand digital currencies because they're already in-game currencies. They're of sorts, but they're not valuable in that sense, right? Only thing that really happens here with true digital asset ownership is that the in-game currencies and the sweat and the time that you put into the game is actually then ownable and perhaps monetizable when you connect to the real economy, right? So that really is the difference, right? About what is it that we have in this space, right? So sorry, your question was, I just somehow lost track of your question.
Yeah, no worries. So, in your opinion, what is the future and where do we go from here for
Applications,
cryptocurrency
right?
or blockchain? Yeah, and the
So
applications.
beyond gaming, we're getting into education as well. So it's the we've asked ourselves the fundamental question of like, is there a market opportunity to be had through tokenization of assets, right? So for instance, right, teachers around the world are probably underappreciated, undervalued from a monetary perspective. Can we tokenize curriculum, right? So that's one thing that we're looking into. The entire education space, in terms of how much money and how much care that we put into it, it's a vertical that we can certainly contribute to. Music is another one that we look at. And because again, the labels, do you believe labels act like platforms, and some have monopolistic powers as well? Can we put more power into independent artists, right? Art itself is obviously one. MAD is one of our JVs. Multiverse Artist Defender is what it is called. And then also in the whole space about sustainability and green, there's a lot more to be had and a lot of value to be had around NFT and blockchain applications.
Cool. Right.
So I think there's a few things to add. I mean, I think Evan gave a very comprehensive solution there, but I generally think about any kind of new technology. So when that was AI back in the early 2010s, there was a similar kind of narrative that said, the world is going to change, everything's going to be AI, but we don't quite know where. And it's taken about a decade for some amazing to be made, so industries and be adopted. I think blockchain, in the very sense that there are economic problems that blockchain is really important for and needed for, rather, and there's a whole other segment which is the art of the possible. So the art of the possible, I think we can talk about all the different ways it could be utilized, and maybe it'd be interesting to do so. I think if you look at the world today, you see a world that has a broken supply chain. You see a world that has food security in agriculture and inflation problems. And you see a couple of other kinds of dire applications in healthcare and perhaps in corruption. And in some of these industries, these cases, people are working very hard to see if blockchain could help with bringing the data to the surface, making it more shareable and accessible so that more solutions can be built on top of it to solve these kinds of industry problems. So I suppose if I put my economist hat on, I think about the things that the world needs today rather than the art of the possible. And I think that maybe the technology's immediate applications will be picked up and utilized most readily by those things that are kind of needed immediately. I think on the other hand, that there's a lot of the stuff that's possible to do. That's for blockchain. I think for crypto, I think the world, certainly us in the investment space, are crying out for crypto projects that involve utility or economic value accruing to investors. I think there is an argument to say that Ethereum, Bitcoin, and so on are useful as mechanisms for trade. And I think that you can make an argument that the more they're useful, the higher the price should be on average because of increased demand. But I think it'd be much easier for us to make an argument for actual tokens and currencies that have utility and demonstrated economic value based upon the projects that they represent, which we have some already, but I think having more will make that argument more readily easily. Maybe the final point to mention here is that there's $33 billion worth of VC and PE money that's poured into this space over the last 4 quarters. That's more than any other 4 quarters previously. The amount of talent and people, like my fellow panelist Evan, for example, here, and many others who are incredibly talented people from amazing backgrounds, who have foregone jobs at Google and Uber and Amazon and all these places to go into this space to create things, including professors and various others, people that I speak to on my podcast and Crypto Cappuccino, but a whole host of others as well, are when you see that level of human talent and money going into a space, you don't quite know where it's going to end up at, but you just know that there's going to be some really interesting stuff.
Awesome. Right. So interesting question we have from Navin. He asked, do you think governments across the world are afraid of this blockchain technology as this could reduce corruption in our traditional market?
You want to go first now, Michael?
Are you sitting in? Well, we're sitting in Singapore, right, Evan? I'm sitting in Australia, so we don't know much about this topic. But I mean, look, it's For those of us, and in all seriousness, for those of us that are sitting in developed economies where we look around and things work, the banking systems work, government works, services work, we kind of look at this use case and go, well, maybe. I think for a lot of other countries where corruption is not only normal and rampant, but it's actually institutionalized, like it's kind of part of the system. I think for those countries, there's certainly an element of, okay, maybe this will kind of help us get around that. I am a little bit skeptical. I think optimistically, yes. And I want to emphasize that the technology can do that. The reason I'm skeptical is more around the idea that, like FinTech challenged banking originally, I have a feeling that blockchain will be integrated into the services and systems of that economy. So the banks and the the governments and so on. Some of these will be private chains. Some of these will be kind of technologies where it isn't obvious that they want to kind of replace and revolutionize and challenge the power structure that is in economies. So I think the possibility is there. And I think for the countries that have adopted it because their financial systems have collapsed, essentially, they put Bitcoin on. I think it's fantastic. And I think it will herald a whole new growth element for them. I'm a little bit more skeptical about the other still functioning yet corrupt countries to go and adopt this. And I'm not going to name any names, but we'll see. We'll see.
I think the amazing thing about blockchain, and also for us as an operator, is kind of like the level of transparency you operate in, right? It's just ultimately it's if you want to commit fraud or you want to steal somebody's NFT, you better not do it in a blockchain because everything is traceable and therefore isolatable, right? So it's once people have really understand and embrace the technology, is really powerful, and it sort of brings upon all of us a new level of accountability that I think ultimately is good for capitalist system as we evolve it, which is really what we're trying to do. We're trying to evolve into that space and then evolve capitalism a little bit to better governance, ultimately to more decentralized trust level, rather than sort of putting everything in the institutions where we believe some institutions might have failed us back in 2008, and in a lot of ways, uncontained inflation and money printing may or may not be responsible, and the way the markets are structured also is in a way that might not be that fair to our next generation. So again, all of these are the sort of the building blocks of how Web3 and the ethos about abundance and rather than scarcity, that focus has sort of come about, right? So governments are not at all afraid of blockchain technology, at least the ones that are large, right? The U.S. obviously under Biden administration, they have sort of issued a directive. They very much embrace this technology, wants the country to lead it. China, which is obviously a very different form of government, is obviously also embracing blockchain technology, but not in a manner that is allowing cryptocurrencies and NFTs in its traditional form to exist in the same way. But they're certainly very much building its own blockchain service network, sponsored by the State Department, issuing CBDC. Just about many central banks, the larger ones, are thinking about CBDC. Again, that is really a different ethos than sort of the decentralized currency as opposed to CBDC. But you can sort of see how the blockchain competition and the thinking around it is already heating up, right? And ultimately, yes, the level of transparency that creates, I agree with Michael here. The application of it will be very, very interesting as we go forward.
Absolutely. Look, so speaking of corruption or fraud, and for the benefit of our viewers who are new to blockchain, could you explain what is the billion-dollar bridge problem and the risk it poses? And how would you tackle this as a player of the blockchain industry?
You mean corruption, or do you mean
corruption or fraud? Yeah.
Well, we have to talk about specifics, right? I mean, you got hacks, right? And you got like Sky Mavis got his notes hacked, and so blockchain by nature, right? If it's secure, like a large blockchain, like a Bitcoin or Ethereum, is sufficiently decentralized with many nodes that validate. It's about blocks and validators, right? And if you want to change the ledgers and steal things, you have to have what you call 51% hack, right? So in some cases where there are not enough nodes, and a certain perpetrators are able to, either through social engineering or whatever, got the majority of the nodes, then you could change the ledger, right? So that's the danger from it. So therefore, that's why the more nodes, the more decentralization, the more trust there is. And that's why we're also a little bit against centralized blockchains in a lot of ways, because ultimately it's still controlled by certain entities that you then have to trust, right? If you have to trust that certain entity, that entity must be regulated in a way, which is then back into what we call Web 2, right? Ultimately. So for us, when you talk about fraud, corruption, and all that, I don't think you would get away from rules such as ensuring that companies that are transacting in businesses with its customers to continue to do things like KYC, AML, and all that. And by the way, Animoca actually administered the Other Deeds cell in Bored Apes Yacht Club, which is one of the largest IPs there is out there. And we actually asked for KYC, right? And it actually was, there was a little bit of a question from the community about why we're doing that. But we believe that that part is important in sort of what we call connecting the real world. Because without knowing your identity or knowing that you're a real person, there could be bots, right? Which is very prevalent in the space. And we really, if you're doing a free airdrop and just connect your wallet, how do you know that you're connecting to real people and really democratizing the project that you have, other than sort of dropping all of these things to bots, which are actually just, more collection of value and extraction of value by individuals who might not be working alongside of the ethos of what we're trying to build, right? So there are certain things that what we call the real world, or in real life, what we call, there's systems that are already built that we must respect, and therefore it comes in thing about how Michael talked about regulations. There are some things that are absolutely necessary, and again, I'm not a 25-year-old new to the space. I've operated, I guess, different industries. I'm very, very realistic about how do you make real change in this world is by, respecting the institutions we have already built. How do you connect that, the new ethos with these institutions in a way that's humble, engaging, and that is trusting for people to move into this space.
Thanks, Evan. So we've got another interesting question from all our viewers, Sonica. I think the question was, do you think there will be job security in blockchain, and any suggestions? I think one more thing I'd like to add is, are there any barriers to joining the blockchain industry to begin with?
Are there any?
How does one actually? Yeah. Sorry, you need me to repeat that?
Sorry, TJ, can you just repeat the second part of your question?
I think to begin with, are there any barriers to joining the blockchain industry, and how does one actually find themselves, landing a job in blockchain to begin with?
So maybe I'll start this one off, Evan, and then you can jump in. It's an interesting question, right? So I think for those of you that are on the call wondering whether you should pivot your career in this area, or I suppose, what are your career prospects in this area? All of you will have different circumstances and situations that you'll be thinking about. Most of you will be working in finance or financial services, some in various other economies, and you'll be kind of listening to this going, gee, I wonder whether I should get into this space or not. First of all, I think there's no clear answer. I think there's just a probabilistic one that you have to think about in your circumstances. But the evidence that I've seen in terms of the data points certainly point me to the fact that there's, I think, a mainstream adoption across the institutional world that's coming. So if I point out Goldman's, if I point to Citadel, these are all they are very established institutions that have set up trading operations for crypto. Nomura announced more recently, I think the announcement came out yesterday or something, that they're setting up a crypto expertise, which is going to grow to 100 people by the next couple of years. And there's kind of countless of these smaller examples that are less publicized and less marketed. So in terms of, I suppose, crypto adoption, like 40 million Americans at some point own crypto, but again, in that kind of speculative way. I think the amount of VC money that's coming in, so you have this kind of groundswell or kind of grassroots adoption that's moving up the food chain. into smaller banks or larger banks and institutions. And whether they're talking about it or not in the press, they're thinking about it. They're trying to work out what they can use it for and what they can do. So I think the conversation is no longer around, is crypto real? Is blockchain real? It's really about the speed of adoption at the different industries and how they will be adopted. So now we're not talking about if, or we're talking about when, or we're talking about how big and those kinds of questions. And I think for those of you that are on the call that are thinking about this space in different ways, as with any fledgling industry, the young industry, the best place is to find market leaders, put your CV in. If not failing that, certainly find startups or startup communities that are meeting up and talking about blockchain. Convince yourself. Many people that have gone into the space, especially midway through their career like me, have fallen down the rabbit hole of DeFi or of blockchain. They've kind of done their own private investigation research, and they've thought, wow, this technology is just so cool and so incredible. I want to get into it. So I think I would say it's not a short-term fad. I think that the birth of blockchain, certainly in the Bitcoin sense, is birthed in a speculative bubble. It's certainly, people trying to gamble and create short-term outcomes. But I think we've moved past that in terms of the volume, the trillions of dollars that have been transacted through these mechanisms, the kind of protocols, the proof of concepts, proof of stake. We'll continue to have failures like Luna, but that is not an indication of weakness in the system. In fact, if anything, that actually will make the system much stronger as people realize that algorithmic, for example, pegged systems are less effective than others, and there'll be risk systems that are created. So I can think of at least a half a dozen, for example, quantitatively minded shops and everything from Into the Block or Cardwell Capital and others who are trying to create models and create the infrastructure around this space. So I suppose I am in the bubble, but I do see that there's a lot of green shoots. And I see that those green shoots, I think even if you get your career into this space for the next 5 or 10 years and you become something of interest, you will kind of get a wealth of experience, probably a good paycheck, but more interestingly, you'll get wonderful life experiences that one day will enable you to write the most interesting autobiographies. So these are all good reasons.
Yeah, I'll just add to that. I agree with pretty much everything Michael said, but I also would add that, isn't the ethos and the spirit of blockchain is that, you don't need security, right? Job security, meaning that, the whole portability of a job and then, how you own your own career through the blockchain space and the Web3 space is really the ethos surrounding the industry. So, first of all, ask yourself why a token itself exists, right? The token itself is sort of like a future promise of a project that might or might not become successful. And then if it's become successful once it's listed, and of course there's going to be vesting cliffs and all that stuff. You will not realize the value for a number of years, but once it's realized, then maybe there is your entrepreneurial spirit that you have had in investing in that token through the investment of your time into it would then pay off ultimately. So a token represents a unit of entrepreneurial spirit in my opinion. Of course, I'm just oversimplifying because not everyone gets tokens and not everybody is compensating tokens either. But that's the way to look at how you create real economies and this tokenized economies that has not realized its value until you've proven yourself to be in a way. So therefore, what Michael was talking about is exactly correct. There is speculation in the space. If you go after the speculation, it's never going to last. When it's not going to last, it's not real, right? So focus on what's real and focus on what delivers impact to the community.
Right. Cool. So we've got an interesting comment, a really long comment, in fact. So someone was sharing that blockchain as an economic solution was long since squashed, not because it should happen, but because it's a threat to the current economic system. So the world needs blockchain in ways it was never allowed to be. You're not allowed to use crypto today unless it's a security and registered, and people can increase their fiat from it. Neither governments nor investors seem to see any crypto as a viable means of trade, with the exception of maybe El Salvador. The reason this has happened is because of KYC. So it's no longer sovereign if you need to own the money. And if you KYC, limit and regulate the entry and exit points, then you stun its application. It also closes the original idea of banking the unbanked. The unbanked are that way because they cannot produce proof of identity. Thus, Bitcoin and its derivative products will remain just as an instrument for investment, which people can tax on, and Satoshi is definitely rolling in on his grave. Thoughts, gentlemen?
I asked you to address that one, TJ, in the background comments, because I think what's really important for everybody in this space who's either coming in or already here is that the topic of money and freedom invokes very strong emotional responses, right? And so people have very strong convictions around the world because of their personal experiences, one way or the other. And so often when you start dialogues on this conversation on LinkedIn or in these venues, you get really strong opinions, right? You get from either side, radical freedom, we don't need governments, we don't need oversight, to all the way to the other side, oh, this is a sham. You guys are trying to make your own little thing that you can trade with each other. And I think this is a really important point to pause on. And there's a lot of points in here, so I don't necessarily want to reflect on all of it. Some of it talks about digital identity. So if we can free digital identity from national constraints, aka the KYC problem, then you're able to essentially engage with this platform or the system without that type of element. Of course, we can't do that very easily because of the anti-terrorism and the other kind of money laundering. As Evan said, we are the same boat. We have to ensure that payments are not used to get around taxation and to get around sanctions and to get around bad uses of capital. That is a system that we believe in. I certainly believe in, our company certainly believes in. We don't want to fund terrorism. We don't want to fund organized crime. We don't want to do anything like that. And that we do that proudly. So we do. Does that mean that we can turn away some clients and some people don't get in? Absolutely. Does that mean that there's some unintended consequences of that, such as the unbanked or people that are off the digital map and don't have digital identities? It does today, but I think there's plenty of companies out there that are trying to tackle exactly that problem and to enable these individuals to have digital identities through cheap mobile phones or through various other technologies. So let's not, I think, combine all these things together. Sorry, Evan, I'll pause. Go.
No, I mean, Michael, I mean, you made some really good points there. I would say that, I'm not quite as bearish as what has been written. I mean, the unbanked is, by the way, there's a lot to unpack there, right? I mean, that the unbanked also can, there's obviously still a solution for that because, through play and earn or learn, and there are a lot of stuff that right now, or being a metaverse architect, a lot of opportunities have been made available via Web3, right? And this is a space that will continue to grow. And at the end of the day, if the crypto or the token stays within the system, there's no KYC needed. There's nothing that's really needed, and therefore, if you're spending your currencies within the metaverse, quote unquote, or within the crypto system, you can stay anonymous as long as you wish. But once you're into the fiat system, there is absolutely no way you can get away from not being named anyway, right? Because you're physically buying things, you might be using a credit card. Whenever you connect with the real financial system is the way the world is. But it doesn't necessarily mean that via this there are no economic opportunities available. So in the Philippines, there are more crypto wallets because of Axie Infinity than there are credit cards. And this is all to do with Web3, right? We're looking for obviously the next most sustainable economic system that allows folks who are unemployed from COVID to be able to have that economic opportunity to then earn a living through what we call universal basic equity, right? Because it's about equitable access. It is about using your creativity. It's about dedicating your time. That in a way, as long as you have a computer or mobile phone in front of you, as soon as you dedicate time for it, even if you play a game, you ought to be rewarded with a certain access for some sort of income through the time that you dedicate into it, rather than sort of like having the Web2 platforms dominating your time, extracting from you, and all you're getting is sort of like likes and sort of like ads that you may not need, right? So what Web3 is really supposed to be transformative. It really is about the data that you're creating, but you're not creating on behalf of your platforms to monetize on you, right? You're monetizing it, you're creating for the community, and the community is really rewarding you for the time that you've put in. That's the ethos of Web3.
And I think it's just to add to that as well, I think oftentimes in these conversations, for those of you that are relatively new to it, you'll find two parallel conversations. One is about the role of money and macroeconomics and the way that our society is structured to do with money and storage of value and trading of value. And for those of you that are very interested in this field, there's a wonderful book called Debt, the First 5,000 Years, written by a guy called David Graeber, who unfortunately is no longer with us. And he talks a lot about the history of debt and money and essentially all the different variations of it. So often conversations around Bitcoin, Ethereum focus around the role of money, freedom, financial freedom, banking, non-bank transactions, etc. There's this whole other area, which I think Evan touched on, which I think is a really good one, which talks about the way that information is stored, retrieved, the way that value is captured with activities and tokens. And this idea that I can kind of lend out a part of my hard drive and receive tokens. I can lend out my attention and receive some kind of a utility in the form of a monetization. And also the point that Evan made, which is that the data that I create, whereas today that forms the building block of assets for many of these large global technology companies that are primarily US based, that data becomes open source and democratized rather than captured only by those agents. So the next competitor that comes along and uses that data to create new products and services for me, whether that's my health data, whether that's my hobbies data, whether that's my whatever data, I can actually pick up with my permission, pick that up a lot more readily and create other services. And that's just on a personal level, not to mention the corporate side, which again talks about the way that companies talk to each other, the way that is mentioned in one of the comments, supply chains and business relationships are created and engaged and maintained. That information at the moment is sitting on assortments of servers. It's sitting on various different, very niche, specific kind of targeted elements that don't talk to each other. So if we can free some of that up and create more open source, as we've seen in many cases, we just see better solutions that as a global community we can create with that.
Thanks, Michael. Look, so another good question, I believe one that's not mentioned enough in the news these days from Catherine. So what is the impact of blockchain on the innovations in agriculture and food security? Maybe Michael, you can go ahead.
I mean, obviously transparency and all that, but you might have a view on that and traceability.
Look, I think it's a really topical thing because so today we have this issue. Again, I'll put my economist hat on for a second. There we go. There it is. My economist hat says that globalization was meant to create more options for us, not less. It was supposed to create us many different ways of, for example, growing wheat, rather than being dependent on one country to do that. And when they go offline, suddenly we have a problem. So I think it's made us re-question, and certainly food nationalization now, with a lot of countries restricting exports, trying to kind of make sure they have enough food, has become a topic, and the broken supply chain has become a big topic on Bloomberg and so on. So from an industry perspective, when I go to, for example, a shop and I have two younger sons, one of them I bought a ball for the other day, and they told me that in May I should probably start shopping for Christmas because they don't think they're going to get enough stock between now and Christmas. So you start to see that there's a real concern in the business around supply chain, all different things, food, electronics, and others. And this idea that if a business wants to change its supply chains around and for a supplier, or if the supplier wants to understand what is the demand for different products and services so that it can optimize its production, you kind of need these type of marketplaces, if you will, that allows the supply and demand to connect with it. Now, aside from the geopolitical issues, which I think is not small, but let's put them to the side, in the grassroots of this problem is a one giant kind of search problem, right? And it's a one giant kind of business connectivity problem, which again, with the right data sets and with the right openness of those data sets, one can solve, I think. And aside from the complexity that many things are built from smaller components, and the smaller components also have to be sourced individually, a lot of this stuff is really about complexity. So when we first started looking at supply chain data earnestly globally, it was around COVID time when we started to figure out that actually that's going to be really difficult to map. But even before that, we're looking at it with Brexit, where the UK was leaving the EU, and suddenly people were like, well, how are we going to get all those things over there? When you realize how complex the net this whole thing is globally, you start to understand your number one problem is just simply data and data transparency. Because now you're dealing with data sets located in different countries, different jurisdictions, different structures, different languages, different whatever. And so this notion of let's go and harmonize in the same way that we use it for carbon credits, kind of this global element of a blockchain. The way I see it is, at least, again, from a very high level, that feels like it's a really powerful first building step. And then there's also a lot more detail to be had after that.
Thanks, Michael. So another interesting question, is blockchain sustainable in the future? I mean, one more thing I would like to add to that is, will we purely just see crypto as an instrument for investments? And what's the future of money in this case then?
Well, two separate questions, right? I think
Yeah.
on the sustainability part, obviously, if you look at the carbon emission, most of it comes from Bitcoin, and then followed by Ethereum, both proof of work protocols. The Bitcoin obviously will probably never move away from proof of work. It's just the how it's going to be. But Bitcoin is also not where the industry is going. People might disagree with me. It's a store of value, but people work on when you want to create digital economy or digital asset ownership through the blockchain. You have to use it through a programmable token, right? Which would be more Ethereum, EVM based, or Solana, Flow. A lot of other chains, right, that we're working on, and they all have different consensus algorithms, right? So Ethereum is proof of work as well, which is consuming in terms of electricity usage, but is moving towards the proof of stake. The event called a merge, which a lot of people are talking about, might happen. It's supposed to happen very soon, hopefully within this year, and then the electricity usage will be much lower. But given the inefficiencies of even layer ones today, there are a lot of layer two protocols being built, which are actually much more energy efficient, so that it gets rolled up and then transactions will then get processed through its layer one chain. So it'll automatically, because of the fees and the efficiencies and the fact that blockchain is very hard to scale, you imagine that ultimately the usage and the processing power will be better. But this is a deeper topic. It's called like blockchains don't scale that well, because the larger it is, it's not like it's more scalable. The larger it is, actually it gets more cumbersome, because it's a decentralized ledger. It gets larger and larger, and the whole thing needs to be it's a block building upon block. But ultimately, that's what we actually believe in a multi-chain world, right? So we don't bet on certain chains to win. And I guess the second part of that question is really about, is it all sort of just finance and all that? We don't think so. So again, if you just look at why people would spend time in the metaverse, it's because it's their other life, it's their second life, if you will, which is actually a metaverse game that has existed pre-blockchain. And people like to spend the time there. We believe that ultimately you want to spend time there, you might want to own real assets there. And that's what it ultimately has come to be. And there will be people who enter in this space for investment purposes, but there are also people who enter in this space as real users of those assets, right? So, you buy a home. Some people who buy homes in either Sydney or Hong Kong or Singapore might have a speculative mindset on it, but ultimately you live in it. So you are a net user, right, of the space. So we believe that time is the economic value that you contribute into the internet and the Web3 space, and that part will always be valuable. And the goods and services that you purchase arising from it is the real use that you're doing, rather than speculation per se.
Right. And while on that note, how do you, as senior management, tackle the impact of crypto crashes on your employees? Like, what are the concerns and potential consequences on your organization when things go south?
Gee, Evan, you leave me the best questions.
I'm happy to go first.
It's free for all. It's free for all, guys.
It's fine. Thanks. You got the really cool question. I get the hard ones. Look, so again, I think for people like me who have worked in financial markets, so I was working in BlackRock during 2008, 2009. I was at Fidelity during 2012. I was at AXA in 2016 for different things. You see what it's like to have crashes and rises and falls. So volatility, although not as much as crypto potentially, it's certainly, you understand it well. I think what happens is there's a lot of, because it's retail investor focus, we have to be very careful with education and educating our clients about what these assets actually do and what volatility means for these assets. So we never encourage people to, for example, think things are riskless just because they seem to be pegged to the US dollar. It just means that there's a counterparty risk that's maybe not well defined. In terms of our particular staff at Clans, I think we have a very senior leadership team that's mostly in banking backgrounds. So many of the team, therefore, have been through difficult times and downsizes and whatnot. I think when the whole thing was happening, we were very active with our clients to talk to them about what we're seeing and why it was happening and so on. I think what I was interested to see, though, is in this space, there's always a gray zone. There's people that are anti-crypto. There are people that are true believers, and almost nothing can phase them forever. There's this kind of interim period of people on the fence. I think there's certainly the crash with the stablecoin and then Luna probably pushed back adoption in delaying it, for a number of quarters for people that were already on the fence and they looked for another negative data point. What was much more important for me was that since November of last year, we've seen a gradual reduction in technology. So NASDAQ is down 35%, Netflix was down 75%, Microsoft, Google, any of these technology companies was down because of a massive movement out of technology that again began back in the last year. Bitcoin was also down 55% during the same period. So if you think about crypto and Bitcoin as behaving like a small tech stock, then essentially it was pretty much in line with the rest of the tech sell-off during that period. So much the general damage, I guess, to morale is around this notion that, as Evan said, this underlying expectation that it should go up forever. And I think that's not going to be what's going to happen. I think we're going to see volatility and movement up and down. I'm really less concerned, and I think our clients and employees are less concerned about that. I think what is more concerned is when you have these promises of structured products that ends up being kind of incorrect or let's say very weak, because in that case, Luna was pushed over. And in that, because the financial markets are ruthless and then they kind of go after weakness, and that's what happened. So I think there's a little bit naivety that peg could be maintained when, basically no other pegs in history have ever been maintained very long without a massive government behind them. So I think that type of is going to influence the middle part of the distribution, the gray zone, which will push out the distribution. I think for people in the industry, if you're going to get into this idea of investing or trading or doing anything in this space, you basically take the volatility as part of the course.
Yeah, I'll add to that, but I'll just do this via sharing my screen with you. I don't know if you can see this. There's a tweet that I really like. I don't know if you can see my screen. Actually, I cannot. You know what? Forget it. but ultimately, I'll say the following, right? Just to add to what Michael is saying, right? And I think I have actually done screen sharing, but I shouldn't do that. Anyway, it's too complicated. Don't time the market, right? I mean, look at the internet boom of the late, I guess the early 2000s, right? Everything.com is like worth a lot of money, right? That's super speculative, right? Be a through cycle player. That's what we are. We believe there are plenty of opportunities in this space, right? Don't, be rushing into investments. Don't be rushing the opportunities. Ask your CEOs or your entrepreneurs to be smart about how they build the business. Focus on building, right? And for the employees, I don't think we necessarily need to pep talk them. It's ultimately we're early in the industry. We're a through cycle player. We build. We don't do stupid things, hopefully, right? And it's fine, right? It's not like that the market doesn't go through cycles, right? And when the market rises, you feel you're a genius. When the market falls, you feel you're an idiot. Don't feel that way, right? What is it that you're building, right? And again, if you have a speculative mindset goes in there and try you'd be the first guy to get out, before the thing sort of like comes back down again, then you don't have the right mindset, right? We really want employees that are actually more purpose driven.
Absolutely makes sense. Look, so we've got a question from John. What do you think is a solution for Web3 applications needing to migrate a function from Ethereum proof of work to Ethereum 2, proof of scope? Is there a tool being built for that?
Well, I'm not the technical guy to tell you what to do in terms of the migration, right? I mean, the applications, you're not supposed, there's no function, there's no tool that needs to be done if the migration is done properly, right? I mean, hopefully there's no technical guy out there pointing me that this is the wrong thing, because you're building on Ethereum blockchain. It's the consensus mechanism that actually changes, right? It's nothing else changes, right? So if you're building on top of Ethereum and also, any L2s are built on top of it, there's no real problem with respect to this migration. The only thing you're worried about is that whether or not this merge is actually going to be smooth in terms of its if it's the technical nature of it, right? Because Ethereum really is what a lot of the community are building onto, and it has to be successful when upon merging.
Yeah, I think I echo Evan's point, which is usually with these types of things, when there's an underlying change that big, and with so many applications that are sitting on the current Ethereum structure, there'll be a lot of people facing this problem, and over time, very quickly, the community figures out what to do. So I think it's again, I'm not aware of them building explicitly, but I'm sure they're having this conversation. It just means they're having really communicated. Don't forget, it's not a company we're dealing with necessarily. It's an organization, it's a group of people, it's a community, and so it kind of functions differently in terms of how it communicates and what it does. But again, I think what is important to understand, maybe the question behind the question, is that blockchain is the tractor. So it really is the first application, and it's the slowest and it's the dumbest in many ways. I mean, it works, it carries lots of stuff, but it's the first generation. And now we're up to third generation, and we will be generation. So if you're building in this space and you're thinking about building either blockchain or building on top of blockchain, different layers or different applications and so on, I think it probably pays to do a little bit of future casting and go, right, what do I think will be an interesting bet? Like, Algorand or whatever, I think that's a really interesting blockchain. Therefore, I'm going to invest the time to get to know the community. And that answers one of the other questions about how do I get involved. I'm going to try to get to know the community a little bit. And through that community, I'm going to see projects, maybe even funded by the association of the blockchain itself, because they often put money out for these projects. And that will kind of get me going. And maybe for the next 3 to 6 months, it will pay some bills while I stand up an MVP of an application on that blockchain. So again, the communities and the money behind these things is substantial right now. So I think there's a lot of money out there in sponsorships to build and to start doing that stuff. And I agree with that, but I think generally speaking, crypto winters or any kind of downturns in the market are a great time to put your head down and build. And many of the greatest companies that we know of today were built in moments of crises. They were certainly funded and created in moments of crises. People lost their jobs and trying to do something different, I think. If you're investing in this space, I think it's one of those periods where it's good to take stock of how you invest and what kind of strategies that you pull and how much of your strategies rely upon the market going up. And essentially, this idea of how you should evolve those strategies to ensure that that's not a dependence that you have.
Right. Cool. So I apologize to the viewers, but in the interest of time, we kind of need to wrap things up. I have one last question for Evan and Michael. I think moving forward, what do you think are your plans for Animoca Brands and for Clans respectively?
Well, plans for us is we're not necessarily shifting our plans as a result of this the sort of the slowdown in the market. We're still going to look for great portfolio companies. We still want to be approached for deals and then collaborations. Work with brands, etc. So we are going to continue to build in the space in a way that is chain agnostic, that is community focused, and across different verticals. That we believe will have transformative impact across these ecosystems. But we might emphasize or put more capital amongst the ones that we believe needs the most help. So there are maturity phases of things as well. So in terms of how we deploy capital, we think it's quite strategic in terms of building up the space. If we believe that we don't need to help in terms of for instance, we're not involved in token design, we're not involved strategically in the way, we might not deploy the same level of capital as we would towards industries that might need more of that help.
Awesome. Well, it's super exciting. In Clans, at least for the next couple of years. We're somebody who just launched our first product to market, which was the exchange. We've got a bunch of investment products that are launching later this year. And then we're going to have a bunch of quant and AI type products that will launch later in the year as well. Again, these are all trading strategies. And the idea is to kind of start to lead the thought leadership around how to get into this space, how to attract different kinds of capital in, and create different kinds of strategies for that capital. Going through a capital raise, expanding the team, going to Consensus next month in Austin, Texas, which I'm hoping will be massive in terms of somewhere between a big concert and a big music concert and a conference. So we'll see what the mix of the two looks like. And just really looking forward to meeting more of the community. We have this Crypto Cappuccino podcast that we started doing, which I really enjoy doing podcasts. And so it's a wonderful way to meet the community all around the world. So we met people in Switzerland, in the US, had wonderful conversations, people who are building, who are imagining building, everything from rebels to more conservative types and everybody in between. So it's a great way to get to know the people and the characters that really bring this industry to life, which I love. So yeah, lots of interesting stuff, community, quant, data, conferences, product growth, capital raise. It's an amazing adventure.
Cool, awesome. So, I mean, to all our American viewers, if any, you heard it here first. Austin, Texas is the place to be. Yay. All right, look, so thank you both for your time today. It was fantastic. It was great speaking to you to understand the world of blockchain and what's next for this interesting piece of technology. Also, thank you to our viewers and whomever that tuned in. We'll see you in the next one. Bye.
Thank you very much.
Thank you. Bye.